So we are about to start a panel on local apps and no need to take over the market. So we are joining the panel with Mayur and Amina. So let me give you a bit of background about them. So Amina, experienced product and marketing for GasBuddy. Just to give you an idea of some of the accomplishments that Amina has done is best new product in 2017 retailer choice for the business pages in GasBuddy. GasBuddy as well has been the third most used travel and navigation application in the US with more than 70 million drivers. And just to give you an idea, since we are talking about location, 70 million people using the app is 70 million moving points, moving locations. Foursquare has around 100. So it's pretty close to that. It's very, very impressive accomplishments, very impressive figures. And then going to Mayur as well, a very extensive experience building and launching digital services and digital ventures. And most recently serving as Group Chief Operating Officer for Cassava, that is Africa's leading mobile fintech, operating in more than 12 markets, countries in Southern Eastern Africa. So it's very, very interesting things going on. So once the intro is done, could you tell us a bit more about your companies, the services that they provide, and as well, how do you measure success in those businesses?
Sure. Thanks very much, Fran. The company I work for is called Cassava. It's one of Africa's leading mobile fintech businesses. It was started about 10 years ago, right at the early revolution around mobile money. And at that point, it was largely feature phone, USSD-based interfaces. And over the 10-year period, has become a digital wallet and a digital financial service business. The company operates across 12 markets, all focused in sub-Saharan Africa, and offers really an integrated fintech service. So it offers a mobile wallet, digital and mobile payments services, a digital banking, so micro savings, micro credit, and then on top of that, a cross-border remittance platform and an insurance platform. So it really is a integrated fintech business. And for us, really, to your question, what does success look like? Over time, as the company has evolved, and in some of the markets we operate, the mobile wallet became ubiquitous. The success measure for us was really how integrated across those different financial services we could ensure and facilitate transactions, so that the consumer base was being able to access a full suite of financial services within their life.
Thanks, Fran, for the introduction. As you mentioned, I work for GasBuddy. It's a consumer mobile application, mostly servicing the US and Canadian market. It's a simple but powerful utility for drivers to find the closest, cheapest gas station. That was the original model for GasBuddy for many, many years, almost 2 decades now. But over the last couple of years, there was a sort of a new mission for the organization to transform and to innovate and move away from just servicing a very small but powerful utility to becoming a car companion application where we'd be servicing our users across many different services, from parking, insurance, payments product, and e-commerce product. So it really evolved from just one small interaction to many that we could service them in different ways. In terms of, again, you mentioned what does success look for us. There are many drivers, of course, in the Canadian-US market. A lot of people still drive and commute every day. We had roughly around 12 to 13 million monthly active users. But for us, it was important not to just think about user acquisition. It was more about thinking about engagement and frequency, and how do we make that experience stickier, and how do we bring the user back into our experience more often and for more things. And so it was moving the needle from just having a customer on file to then having a customer with bank on file and then making those transactions. So it was really about engagement and getting to know the customer more over time.
Excellent. So now it's time to start seeing. So we have seen with this a couple of examples the potential of these local businesses. But I want you to think about other local apps or local businesses that have become massive. So just think about, for example, Uber, Lyft, all these type of Waze, etc. All these type of companies. Their value today at the hundreds of billions of dollars. So this is a completely new industry that has been generated from scratch over the past 5 to 6 years. We are seeing the potential in these applications, and kind of the theme of this panel session is that you don't need to own the world to kind of be successful. But there is the implication, the thesis, the investment thesis that we are trying to prove is that you can start very small and you can become very big. But when we are talking about how big you can become, and this is what we are trying to prove throughout now, this part of the conversation is, where is the limit? Is just sky? Where is the limit in terms of, based on your own experience scaling these businesses, where do you see how big you can become with a local-based app?
I think, for us in the context of GasBuddy, it would make sense for us to expand and enter new markets just because there are drivers everywhere. Everybody needs gas as a commodity item. So it's easier to say, that just entering new markets would be how you approach it. But I think for us, the angle was slightly different. We tried to enter a new market and pulled out of it because we realized that the extent and the opportunity to go deeper and wider across verticals, across the depth of just knowing your customer and servicing them within the market we were in, which was the US or North America, was really, really large. So I think the angle that we took was, it proved to actually be successful. But I think a lot of times people think about expansion from the context of geographic expansion. And I think it's important for organizations or startups and companies who are thinking about it is to really think about how do you provide more value and the extent of that value. And that can, that could mean different things for different people.
Yeah, for us, we kind of think of Cassava as a regionally focused business with deep local expertise. And I'd say we don't yet have shied away from global ambitions, but it's something we'll ultimately want to get to. For us, how big can these companies get? I mean, if you look at the markets we operate in, you have unbanked customers that represent anywhere between 60 and 85% of the population. So actually the ability for local or regionally focused businesses to provide a successful fintech business and reach scale is wide open. These are largely underserved markets. In terms of market expansion and how we've thought about that, I mean, in many ways, market expansion for us has come in surprising forms and not necessarily in ways we anticipated. So part of the company is an integrated fintech vertical stack, and in some markets we've replicated all of it. But actually in other places we found that certain parts of the utilities that we had created to service our products were actually the things that were most exportable. So for example, in many of the markets we operate, Zimbabwe, Botswana, Zambia, elsewhere, it's a very fragmented payments ecosystem. And so in order to fulfill the funding of our mobile wallet, we actually built our own in-house payment gateway to link with all the telcos, banks, etc., local savings clubs. And actually one of the things that's been most successful about our international expansion has been taking that gateway and expanding it across border. So it sort of comes in different forms.
I find this is very, very fascinating, Mayur and Amina, your examples, because if we look at other local apps, and we're just talking about Uber, is how they have, let's say, taken a city over first with mobility services, and then they start increasing and adding more and more things to the stack. And I mean, I'm just talking about your examples, so on the gas stations, and this is something we were discussing just outside, is how you've been adding other services like parking, insurance, etc. So like how quickly you can elevate the value for the user and as well grow the business. And as you're pointing out as well is the utility, the utility factor of integrating payments. So all of that is really fantastic. So we see that. Seems that our thesis is proved. Sky's the limit. I don't know how the audience feel about this thesis. Do you think that we can start with a niche app and we can continue growing up and indefinitely? Is there how many of us think like that in the room? Just a few. Okay, so we need to keep convincing everyone. However, the other side of the story is that there might be some natural forces pulling the business up. That's what some people talk about, network effects and some of these things. And there might be some headwinds. So if you could please cover, based on your experience, what has been, let's say, easier to scale and to grow, to get into that kind of a big ambition, and maybe what are the difficulties?
Sure. So I think what worked for us was that, if you think again, from building a product or innovating around a pain point, if it's truly a major pain point for the users, I think sometimes some of the early success can be natural. In our case, gas is a commodity item. It's a grudge purchase. Or fuel, I should say. So, everybody needs it. Nobody wants to pay for it. Nobody wants to pay more for it. And so we were lucky enough that as the initial concept was developed, which was actually a crowdsourced experience, that users were willing to share the information because they wanted to help each other out in trying to save cents and dollars. And it was all organic for us. So, the organization sort of took advantage of the fact that they were solving a pain point for which the users were willing to share information, were willing to engage with us, and that turned out to be in our advantage. And we were able to acquire, millions and millions of users who came into the experience. But what wasn't easy, and I don't think is always easy, is the fact that how do you take that baseline usership and then again create the engagement and create the retention that you need, and then also find ways in which your business can be monetized or be profitable. And so the initial stage for us was 100% organic. We never paid to acquire users, which in today's world is unheard of, especially in the app world. But then, once you have that acquired user base, how do you move the needle? And for that, I think you have to be smart. You have to really get to know your user. To get to know your user, you have to do a lot of testing, you have to collect a lot of data, you have to personalize the experience, and then, of course, build additional capabilities that will, hopefully bring them back for more and make you money. So,
was the same story for you, Mayur, kind of organic growth and organic momentum, or was it a bit different?
Yeah, no, it was a bit different. And I actually think this is the case in many instances for emerging market businesses as well, which is even if their dominant service is a digitally based service, they actually have to spend an enormous amount of investment in supportive analog structures that help power the digital business. So in our instance, when we launched the mobile wallet, we were operating in an environment where 90+% of all transactions were cash, partly because of how unbanked the systems were. And so in order to fund the wallet with a digital currency, we actually had to build out an enormous agent network to facilitate cash in and cash out on the mobile wallet. And that required a huge investment. But once we had the agent network in place, cash in, cash out, P2P, etc., really grew exponentially. And interestingly, that same experience is actually replicated in some of the biggest regionally focused businesses that are out there. Even if you just take Grab or Gojek, they're ostensibly ride-hailing companies, at least that's where their emergence was. But in order to support the payment and payment collection, they themselves had to roll out an enormous mobile teller agent distribution system to facilitate their digital business. And in many instances, it was the same for us.
Quite interesting. So we have seen we are more or less at the equator of the panel. So what we are going to be doing now is moving more into lessons learned. So this is starting to look like what things have worked from a business, from a strategy perspective. I would like you to prepare questions because there will be the opportunity to ask things. So we'll start through some prepared questions. But if you have any questions throughout the conversations, just raise your hand, and we will carry on with your questions. So. Okay, so we have talked how we grew, etc. But what about the inception, the starting point? How did you find out that niche that kind of created everything? What was the secret sauce to get to that point?
Yeah, I think for us, if I just take one of the, I think it's probably a good example in one of the extensions of our service, which is around our savings product, and I think it's probably a good example in terms of how locally focused companies can outcompete global businesses, which is if you looked at savings and savings data in our markets, less than 14% of people will report actually formally saving with a bank or an institution. But if you ask people, well, do you ever participate and save and provide lending to your family or your friends, the rates are over 30+%. And so that actually informed a lot about how we approached the savings market. Whereas in the US and in Europe, the bulk of savings applications that have really taken off have been saving applications that have largely done two things, right? They've either said, the bill you paid was $9.50, we'll take the 50 cents and put it in a savings wallet, or we'll do an auto debit every month on your paycheck, etc. That kind of approach wouldn't have worked in our savings markets. And so instead of building a individual piggy bank, what we actually built was a group savings account that allowed for the digital transactions for informal savings clubs. So it was a group account that had multiple administrative rights so that multiple people in the group could unlock it, and you had to have certain permissions provided, etc. And that's actually what fueled the bulk of our savings growth. But it was finding a niche, or well, not necessarily a niche, because actually it's the bulk of how savings occurs, but it was finding something that was a little bit more under the radar than if you were just looking at traditional ways companies have approached savings.
Very interesting. What about you, Amina? How was the starting point?
I would take it maybe slightly differently in that, maybe how do you find a product market fit for something that you're innovating on, and that may be, a niche product. But I think a lot of the times in sort of piggybacking on Mayur's comments, I think for GasBuddy, we had made a pretty ambitious leap in sort of entering the payments world. As I mentioned, users, come into our application to search for information and then to expect them to sign up for a payments product. That to everyone, even working in GasBuddy, seems fairly ambitious. And then to figure out within the payments world, it is complicated. A lot of people, of course, choose different methods of payments. But we had to make a decision of what direction to take, and our direction was direct debit or ACH linking to your bank account. And initially, there was a lot of hesitation. There was a lot of course, research that was done, a lot of surveys. We wanted to understand our users and their appetite for signing up for something like that. And one side of the argument was nobody wants to give you their bank account. And of course, nobody wants to give GasBuddy their bank account. And so, we did go ahead with that also because going the credit route was harder for us. And we were willing to take that risk. But I think the way we learned that we have found the product market fit is looking at the numbers and looking up not just the signups, but also the continuous transactions that were taking place. And so there are certain indications, and of course, like any product organization, you have certain metrics that you measure against. And as long as your numbers are making sense, you know that you've hit a mark. And then how you go beyond that can be determined by a lot of the learnings from your users, of course.
Very, very interesting point of view, and it's good to combine how to initiate and how to innovate. I think that the two aspects is something we find regularly. Any questions already from the audience for Mayur or Amina? Yeah, please.
One question for Mayur. The middle class market in Africa is obviously one of the largest growing in the world, and obviously as you look to scale across the continent, as more people start engaging with feature phones, or you can get Cassava downloaded as an app, how do you find reaching out across language? Because I know language in Africa is massive. How do you create a consistent model, and how do you manage that and create a plan to scale?
It's a great question. It's funny when it comes to Africa, people think that you can just do one solution for the whole continent, but no one would ever say the same thing about Asia, right? No one would ever say, oh yeah, whatever we implement in China will work in the Philippines, right? Or what works in India will work in Vietnam. And really there's the same differentiation between these markets. You're exactly right. So we have to localize all of our digital applications. They're in English as a default, but also in Swahili, in French for Francophone Africa. And then in places like Nigeria, there are multiple language settings that we have. Even the app listings as well, we have to be able to provide in multiple languages. So it's definitely a core part of our differentiation. We've even, in some markets, actually rebranded the service offering so that it has a local name and a local flavor. So for example, for the savings club digital platform that we have, in a place like Zimbabwe, it's called Mukando because that's the local name for that type of service. But in a place like Nigeria and West Africa, it's called Susu, right? So all of the local variations have to kind of feed into how we build out our products around that.
Great, thank you. So we have moved now into more how do we tailor for the local differences, but maybe one follow-up question on that is when you're operating locally and you're growing your size, is what happens when a big player, a global player tries to come into the market and you need to fend off and protect what you have already built. So I think the two of you might have examples, so maybe I can start with you. I mean, if you could maybe share your experience, how you have played that way, because I think you did that as well, like from global to coming to a market, and how you have fended your own markets.
Yeah, I mean, I think in general competition is healthy and it's good, and one has to always, think about that and prepare for that. I think it usually drives innovation for teams to think about how to stay competitive. So, of course, for us too, and as we extended our product portfolio, we had a number of different organizations or companies, potential large global organizations that were competing or overlapping in some ways. I think the key point that comes to mind for me is that when you have these large organizations coming in and entering the market that you're in, look for opportunities to sometimes partner with them rather than think of them as competition, because we found that as we were extending and we were building and trying to scale our services, that it didn't make sense for us to go out and build something similar just for the sake of competition. In some cases, Google competes with us. And so it would be naive for us to try to compete with Google. Of course you can, but that takes time, it takes money, it takes away from something else you may be working on. And so how do you find ways to, and for Google, it's not their core business, they're just trying to service their users in a way. that it's holistic and overlaps with what we do. So we found ways to partner with companies where we could. But otherwise, of course, you're always trying to think about how do you differentiate, and to do that, I think you really need to know your consumers well enough, to see how you can provide value.
No, very interesting. The market where you're operating. I'm thinking about so many Google products that in a way overlap from Waze to all the Google Shopping and the businesses, etc. What about you, Mayur? Because you are in addressing, as we were just pointing out, a very fast-growing market, so very attractive from that standpoint, but as well on a very interesting area, which is payments. So how do you protect yourself?
It's a fun question, because in some ways this is kind of coming full circle a little bit in the fintech space. Because if you think about it, the actual origin for a lot of the local fintech businesses or regional businesses was disrupting the global incumbents who were traditional brick and mortar banks, right? These were like global Barclays Bank, global Standard Bank, etc. And it was regional local players who were a bit more innovative, who were faster to move in this direction. So that's kind of the origin of this. But yes, it is coming full circle again, because there are a number of global fintech businesses, or put it another way, global platform businesses, who have major ambitions to be fintech players as well. And when you look at the scale that people are operating at, I think fintech globally last year, there were $35 billion invested in fintech companies. Less than 100 million of that went into African fintech companies, right? So there is a big mismatch in terms of where the cash and firepower is coming. One of the things that keeps us alert and on our toes is what happens when WhatsApp and Facebook launch their social payments platforms, right? What happens if Libra passes all these regulatory hurdles and becomes a global service? What does that do to our digital wallet businesses? Because I do think the thesis that, and people have said this before, that commerce is going to follow conversation, that social media platforms are going to be very, very powerful players in the financial service space is true. But we kind of think about it as Amina was saying, which is, even if Libra or WhatsApp were to enter our markets in an aggressive way, they still need to solve two big things that require quite a lot of local boots on the ground and local knowledge. They've got to solve the merchant integration aspect. That's not straightforward, right? And many of these companies aren't geared up to go do that, which is a lot of kind of hand-to-hand combat trying to acquire people onto the platforms. And the other thing is they're going to need a way to fund those digital wallets regardless, right? So that's going to speak again to the value of having an agent distribution network, major integrations across multiple different wallets and banks, etc. So it's, we know what's kind of coming down the horizon, but we still think there are really valuable ways regional players can participate in that ecosystem.
I think the answers are already gravitating towards one of the next questions, but before we move there, is there any other question from the audience that we want for Amina or Mayur? Okay, so we talk about this competition, and we seems to be gravitating towards the importance of partnerships, so local partnerships. We talk as well about even partnerships with the big players. So what has been your experience so far and the outcomes of a partnership strategy in terms of data, competition, and
Yeah, so the way Cassava was built from the very beginning was to facilitate a sort of a broader payments ecosystem, and that required partnerships with telecommunications companies because they had the dominant platforms, and with banking institutions. So it's always been in the history of the company's DNA. But even in other places where we've tried to expand beyond into new fintech verticals, for example, insurance, we've had to rely on existing insurance companies because of the way those markets are regulated. So in many instances, there are limitations on who can have insurance licenses, etc. So a lot of the services we offer are actually on the back of partnerships with incumbents who are happy to partner with a digital-based platform to capture a different part of the market that they aren't traditionally serving. That's really how we've seen it.
Yeah, and I think even from our perspective, I think keeping the goal in mind, which was fast tracking innovation, fast tracking new capabilities, it made sense for us to partner and to integrate certain technologies within our experience many times, rather than us trying to build from scratch. So I think, Fran, you mentioned earlier as you were describing the evolution of GasBuddy, and we ended up building a product for our users, which was park with GasBuddy, just like pay with GasBuddy, and all these with GasBuddy, and so essentially we many times I think there was a decision point from the stakeholders as well as from the product organization to understand the cost of building something in-house versus trying to integrate or to partner. And in many cases, I think the partnership model worked because, again, as we mentioned earlier, there are times that it's not your core capability and somebody else has already worked on it and built it and has the experience nailed down. And so, it's understanding the cost of not doing something else. So in many ways, we integrated and partnered with companies that could help us complement or help us extend our services. So I definitely think it's a very important and critical piece as you think about growing. And I think it's also very, very critical to think about when you are thinking about entering new markets. I think I mentioned earlier that we had made a decision to enter Australia and then we pulled out of that market. But the reason for actually entering Australia was that we saw possibilities of partnership so that we could very easily integrate into the system and integrate into the ecosystem versus having to build it from scratch. While that didn't pan out, I do think as you're thinking about expansion and thinking about entering new markets, partnering with the right folks on the ground is definitely helpful.
No, sure. What we are hearing, which I think is as well quite interesting, is this partnership with insurers, for example. And we were during the break discussing the partnerships you had to do as well with parking providers, so that there is all these silos in the industry that are being removed. And that as well fosters on your side the partnerships. And when we're talking about the excitement of these local applications, that it opens up other ways of monetizing. So it's not only about advertising; it's some other sources of monetization, which I think is quite relevant for the conversation. So very, very interesting, and hopefully you're taking. So I think we have time for one or two more questions. So we have more things here on the panel ready, but. If you guys have another question, feel free. Yeah, please.
What about the move to being a super app that we're hearing so much about that? How much of that should be in your strategy? Should that be your goal? Is that realistic, or is that something left to the bigger apps, the bigger players? You talked about commerce and conversation, and we've got all these banking apps doing commerce, right, and social. I'm just curious, is that the end game here? For you when you expand?
Yeah, it's a great question, and it does factor into a lot of our thinking at the moment, right? Most of the people most of the super app conversation has come out of parts of China, right? Who've really led the way on what you do around this. But on the flip side, you're starting to see social platforms out of the US also thinking quite aggressively in this space. For us, we do see it as a natural next evolution. But we come at it because of the core payments competency and the ecosystem we've built around that. And on top of that, the vertically integrated services we have. So those have been, while linked, and then sometimes we use them for kind of cross-selling and promotion, those have been standalone services. But the next phase of our digital evolution, as we see, is how that can be combined and what the synergies around that are. And so we've just launched in some of our markets an application called Sasai, which functions very much like that. It is a chat-based payment service that then has an explore section. And under the explore section, we link to services that our payments facilitate. And then we also link to the insurance, microcredit, overdraft facilities, etc. around that. So we think that is in line. It hasn't happened yet in Africa in the same way it's happened in East Asia, but that's where we see part of this moving.
I think, as you guys probably already are aware of this, but I think there's a stat that's being thrown around, at least in the US, which is like about 90% of applications that are downloaded are never used. And the whole concept of app fatigue is becoming real. So I think if you have critical mass and you have the right level of engagement from your users, I think companies are trying to build an experience that's holistic, that allows for not just the core, but all the adjacent touch points, so that you can really own the user and the journey. So I think, as Mayur alluded to it, that a lot of the folks, I think, have that as something, as a long-term view. If you can get to it, that's fantastic. But I do think that you need that critical mass, you need that level of engagement. But if you're doing all those things and trying to really understand your user journey, then hopefully you can get to it.
Okay, so we have time for one more question, but I wouldn't like to kind of close up the panel without touching on a very important topic as well. So there are a few sessions dedicated specifically to data and analytics, but how has it changed your way of doing business over the past 2-3 years? The fact that you're owning such an important set of data, and you're now able to extract more things with all the analytics and data science functionalities. A couple of examples, maybe.
Yeah, so for GasBuddy, it's a location-based application. So to use a service, you have to turn the location on. It's a highly permissioned app with, of course, all the data privacy issues that are going on. And I think for us, it's obviously helped us get to know our user better. I think companies struggle with it in that if you are collecting a lot of data on your users, how do you really parse it and how do you get close to it so that you can then use it to build a better experience? So I think it's a work in progress. We're learning, we're developing teams within the organization, the data science team, and buying technology that can help us. But at the same time, the collection of the data has also helped us build and innovate a new product, which was for the retailers, a SaaS business intelligence tool that can service the retailers to understand the users and what their behaviors and what their preferences are. So I think all in all, data can be very, very powerful if you can very quickly learn how to leverage it.
I think we were unfortunately running out of time. So maybe just to close up, big thank you, Mayur. Amina, really, really great examples. Is benefit for everybody to be able to get to know from your experience, get to know you, understand the big potential of local apps and your lessons learned. So this is absolutely amazing. Thank you.
Thank you.
Thanks very much. Thank you.